Welcome back, YouTubers, to part 2 of my dividend plays, and playing it a little bit safe here towards the end of our long bull run. So I finished off with Trans-Canada pipelines. Again, it's a good long-term holding for income and capital gains. Another one which is purely the electricity generation and distribution is Emera, which was, I think, Nova Scotia, but it's kind of expanded out. They've got I think 8 divisions now, from down in Florida and throughout the United States. I think they might even have some generation in the Caribbean. Again, we've got that same kind of trend here, where you're getting that capital gain over a long period of time, and it's again paying out a dividend of 4.68. So again, you're looking in the 7% total return per annum, say over a 5-year period, which is quite good right now. And so it's one I continue to hold and like in this environment. And we've got the last one is another gas pipeline company, and it's Inter Pipeline, which is IPL on the Toronto Stock Exchange. We're fortunate in Canada to have a lot of these actually large utilities that pay a good dividend and actually manage them quite well. And these are, you know, really world class companies. And again, Inter Pipeline is transportation of petroleum, oil pipelines, gas pipelines, similar to Trans-Canada Pipeline. It actually has a very good dividend yield right now of 6.27%. It has been a little bit more volatile, which I haven't quite figured out why, but we can see here we're very steady. Got a little bit overpriced up in the 40s, dropped all the way down to 20. I started buying on the recovery here, and we had another drop off, but at least it didn't drop below the previous low. So I'm just kind of hoping with the dividend right now being above 6%, really as long as we stay up where we are now and doesn't drop too much, I'll be quite content just picking up a dividend. And it looks like it may, I think it just got a little bit overpriced here and kind of sold off. The long-term technicals are, with the McDie, you can see we formed a bottom here, and the last one was a little bit higher. And even the money flow index, which takes price and the up or down volume into account, has actually came up quite a bit, so there might be money starting to flow back in. And companies like this, I mean, your pension funds and that just pretty much have to own these in Canada. So because of the income they produce and the stability, and they have to start becoming more cautious with the markets continue to reach very high valuations. I think that's again the beta on this one is 0.97, so that accounts for some of this volatility here. I didn't say it on Mira, but again it has a negative beta of negative decimals 0.03. Trans-Canada Pipeline was 0.6. So you can see they are quite a bit less volatile than the overall market. That sums up for what I had today. I just wanted to put some kind of conservative income stocks out there that I think over time you really don't give up that much. If you look at some of the technology companies and what their returns are over a longer period of time, it's hard to beat some of this. And what's nice with the dividend, it's not all a capital gain. You're actually getting money returned to you, and you can either put it back into the account, but now I'm letting the dividends actually just kind of build up, and then wait for a correction, and then I can put those dividends that I've received to work, hopefully in a cheaper market. So it's another way of staying in the market, but you're still shifting your bias more to the conservative side. So I hope you found these two videos of interest. If you do, give me a thumbs up, and please subscribe if you'd find these videos of interest. And thank you.